what we're going to be going over here is activity-based costing, and we'll look at in terms of an inventory valuation method here. It's one of the inventory valuation methods that we use in cost accounting here. So if we look at these valuation methods here, we started with our throughput basis here. Then we work our way down to direct or variable costing, and then we get down to our absorption costing. And this is what we're going to be looking at, our activity-based costing here. So what we want to take away from this with activity-based costing, our inventory costs here, this is where you're going to accumulate most of the dollars here using activity-based costing. The least amount goes into your throughput costing, and then you got these varying amounts here for your variable cost and your full absorption. But activity-based costing, this is where your inventory cost is the greatest here. Okay, so for activity-based costing, really what we're looking at here is what we're going to capitalize in our inventory here versus what we're going to expense. So again, with activity-based costing, nothing gets expensed. Everything is going to flow into these activity cost pools here. The direct materials, your direct labor, your factory overhead, variable and fixed factory overhead, plus all the selling and administrative expenses, variable and fixed. And when I mean selling and administrative, I'm talking about all those support functions, the engineering functions, research and development, and so forth here. But all of those get accumulated here in those activity cost pools with activity costing. And then they're going to be drawing out of these activity cost pools, and they're going to be going into inventory here and capitalized in the inventory. Okay, so that's our activity-based costing as far as our inventory versus our expense here. Now let's look at it in terms our cost flow here for activity-based costing. So what have I got here? We'll look at it in terms of our cost flow here. We're going to have all these asset accounts here, and then they're going to flow into, we're going to accumulate all those costs here. They're going to go into a work in process, then they go into finished goods here, and then they get accumulated here in a cost of goods sold, and they get matched against the sales for the period here. Okay, so first for our cost flow here. Now you see there's nothing that we're expensing here. Everything is going to go into our inventory accounts here. Work in process, finished goods, and then into cost of goods sold. So we have for our asset accounts here, we're going to have our activity cost pools. We're going to have all the indirect costs here. Material, labor, overhead, selling and administrative expenses. I broke out the indirect costs here. You keep them separate when you're talking about activity-based costing versus your direct costs. The direct costs are going to be your direct labor, direct material, and other direct costs here. But they are separated when you're working with activity-based costing. Variable costs are separate from our direct costs here. Okay, so what we refer to as direct costs is the direct labor and direct material here. Now, sometimes those are called variable costs in the other costing systems here, but we refer to them as direct costs only because they can be traced directly to our inventory accounts. Whereas these our activity cost pools here, those we call indirect costs because they cannot be traced directly into our inventory. We have to make some allocation based on some estimates here. But direct costs, those are all those costs that are traceable into our inventory. Nonetheless, they get all accumulated here as our total manufacturing costs. So we take all those factory and support functions here, the indirect and the direct costs here, the material, the labor, the overhead, selling and administrative expenses here. Then they get all accumulated. All the variable indirect costs plus all the direct costs get accumulated. They go into our total manufacturing costs, and then they flow into the work in process here. So we take our beginning work in process, add to it all the total manufacturing costs for the period here, subtract out our ending work in process. So that's going to give us our cost of goods sold, cost of goods manufactured here. So that's our inventory, our work in process plus our finished goods here. So our finished goods, just take your beginning finished goods, add to it total cost of goods manufactured, subtract out your ending finished goods. That's going to give you your cost of goods sold here that you're going to be expensing here for the period. All right, so that's our basic cost flow here for activity-based costing. Just remember here, these activity cost pools that we're talking about here, those include only those indirect costs here. We have to make a distinction between our indirect and our direct costs here. Nonetheless, they all get lumped together here, and they're going to flow into your inventory, be inventoried in your accounts here until sold, and then they're going to be expensed in a cost of goods sold. Okay, so going down to our activity-based income statement here, and we'll look at it based on that cost flow that we're looking at. So we start with our direct materials that we've used here. Just take the beginning materials that you have on hand, add to it any purchase materials for the period, subtract out any ending materials on hand. That gives you your direct materials used. Then your manufacturing costs, those are going to be the direct materials here that we've used, plus the direct labor, plus our fixed and variable factory overhead, plus all those selling and administrative expenses. So that's our total manufacturing cost. All those costs, nothing is being expensed there. They're all being included as manufacturing costs. Then our cost of goods manufactured, just take your total manufacturing cost, add to it the beginning work in process, subtract the ending work in process. That gives you your cost of goods manufactured here. So now for your cost of goods sold, just take your cost of goods manufactured plus the beginning finished goods minus your ending finished goods. That gives you your cost of goods sold. So looking at it in terms of a gross profit or net income here before taxes, this is the case here where you just take, now you look at your sales dollars here for the period here, and then you'd match against your cost of goods sold that you have. Match those cost of goods sold against your sales dollars for the period. That's going to give you your gross profit here. Okay, so this is just a basic income statement here. There's also alternative income statements. It would be a multi-contribution activity-based income statement. It would be based on the different activities here. I just lumped everything together here. Okay, so the only thing I guess we really want to take away from this here is with the cost flow here for the activity-based, you do want to keep your indirect costs here. Those are the costs that you can't directly trace to the inventory. What's your inventory? You want to keep those separate from your direct costs here. All right, so we went through and we got a basic idea here. What is inventoried here is inventory cost for activity-based costing, and really it's all the costs involved here. All right, so that'll end our discussion here on activity-based costing and as an inventory valuation method.